Hi, I'm Andrew Yomilkowski, owner and founder of Heartland Credit. Thank you for taking a time to listen to one of our series of videos regarding credit education along our process. This video is called Pay History. And I'd like to start with this one because it's one of the most important aspects for you to build your credit. See, the reality is you've hired us on some level to go in and to remove inaccurate negative items from your credit. But along the way, one of the things we want to do is we want to give you the ammunition, the tools, and the credit education that you probably should have been given in high school and college to teach you how to drive your credit long term. So let's talk about the largest individual factor that actually computes your score. It's referred to as pay history. Pay history is just that. It is, did I make my monthly obligations based on the contract that I signed in the correct amount of time? With FICO, who actually wrote the mathematical equation that computes your score, it's the single largest factor to credit scoring. It actually represents 35% of your cumulative total credit score, okay? So think about it this way. Most of the time, if you have a mortgage, for example, the mortgage note is written in that your payment's due on the first of the month. You have a grace period of typically maybe 15 days, and then they'll charge you a couple percent finance charge for being late. But if you get your payment in on the 5th, you're fine. If you get your payment in on the 10th, you're fine. On the 16th, maybe you pay them a couple more bucks, but you're still on time. The 20th, you're still on time. Where problems come in is when you actually go 30 days late. So again, your payment when your mortgage was due January 1, but you didn't physically get that payment to that company until February 1 or at a later date. That's going to result in a 30-day late. Same thing with Visa or MasterCard or Discover or your car loan. Typically your payments are due at a specific time. You have a grace period, and then 30 days you're going to be considered late at the credit bureau level. Now, this is incredibly important to understand because the basic skills of credit, I mean, if there's one thing that I want every customer that enrolls in Heartland Credit Service is to understand, get to the point that you can pay all of your bills all the time, on time. I can't make it more important to you, okay? Here's an example. You pay your bills on time for 12 months. You have a mortgage, you're on time every month. You have a car payment, you're on time every month. Maybe you have 2 credit cards you're on every month, and then you've got a boat loan, okay, that you're paying for a brand new boat that you bought. Over the 12-month period, you haven't missed any late. So along the time, every time you make payments on time, you get some credit points. You get rewarded for paying bills on time. It's 35% of your score. So let's say you were a 600 at the beginning of the year. Your middle score was a 600 of the 3 credit bureaus. And in January, you got a few points for being consistent, February, March, April, so on and so forth. Well, now we get to the end of the 12-month cycle. You've paid everything perfectly. You've now gone from a 600, let's say, to a 660 credit score. But let's say the next January, you're late on one bill, maybe just the mortgage. Just one time, you didn't get it there on the 1st, you didn't get it on the 15th, you didn't get it on the 20th. It actually went to the next month when you finally were able to get that payment processed. This is what can happen. You can go from a mid-600 credit score, that 650, 660 range that you have worked really hard to be at, but now what happens is because that single 30-day is so punitive, it is so negative that you might lose 50, 80, even 100 points for a single 30-day late payment. I think the most frustrating thing about this for customers is it's being consistent that becomes so difficult. They're on time for 7 months, but then they have a 30-day late. Then they're on time for 3 months, then they have a 30-day late. Then they're on time for 11 months, and they have a 30-day late, and they don't understand why their credit score isn't really moving up. And here's why. A single 30-day late is going to drop you huge. It's going to drop you 30, 50, 80, 100 points, depending on how high you are up. Okay? The lower your credit score is when you start a 30-day, the less it's going to drop you because you probably had quite a few for it to be that low anyway. But when you're working on moving it from a 550 to a 600 to a 650 to a 700, the key is consistency. Okay, the age of decay, meaning that when you have a 30-day late, you might lose 60 points the next moment that your credit is pulled that next month. But when you pay everything on time next month, you might only get 5 points back. And then the second month, get another 5 points back. And then the third month, get another 5 point back. So the point I'm making is it takes 9 months of paying a bill on time to recoup the one time you were late. It's similar in our bodies. So you think about it, if I fall and I break my arm today, it might only take me 5 seconds to fall, trip, and snap my arm. But I'm going to be in a cast for 3 or 4 months. Same thing with credit scoring. If you're late on your bills and you don't get that bill paid within that 30-day time frame, they're going to hammer your credit score, and it's going to take you 7, 8, 9, 10 months typically before you see your credit report move back to where it was from the single 30-day. So again, when it comes to pay history, when it comes to how do I get my credit score going, the first and foremost thing I'm going to ask you folks is make sure that you know who do you owe. What do you owe them? And when is that payment due? Let's get it on a spreadsheet. Let's get it on an automatic withdrawal. Let's get it so that you're managing your financial world to the point that you know who you owe, you know when you owe them, you know what's due, and you can get to the point where it becomes very simplistic to pay your bills on time. When I look at clients that are struggling to pay their bills on time, it's usually a little bit of a lack of a budget, or it's a little bit of a lack of being able to just hold it all together. If you can get to a place where you're paying your bills relentlessly on time, you're going to find your credit's pretty darn good. It's the basic skills of credits. So again, let's review. Pay history is 35% of your cumulative credit score, okay? It is vital that you pay your bills on time, and always make sure, even if you're going to be a little late, you get them in before you're 30 days late, before you take that big hit, okay? So, the last thing we want to make sure that you're doing is obviously making sure that when you do buy things, you have the money to afford them, because that's where you get in trouble. You find something you like, you get that credit card, you go out and want to buy it, and now all of a sudden when that bill comes due, if you can't afford to make that payment, you just destroyed your credit. So we're going to start today with pay history. It's incredibly important. You have an individual account executive that you're working with. If you have any questions on this particular bit of information, please call them. Again, my name's Andrew. I own Heartland Credit. It's a real pleasure to serve you.